Crowdfunding for small proprietary companies presents opportunities to both small medium enterprises and also accountants. Wanted accountancy firms committed to crowdsource funding. This market's not for everyone. We're not trying to promote this product package to 10,000 accounting firms in Australia. We think the market's maybe for about 1,000 accounting firms, and that's what we're very happy to make this presentation to you to give consideration to. Do you want to be part of the 1,000-odd firms who can make a difference to small medium enterprises by helping them to get ready to be able to raise capital as a small proprietary company? This is brand new. No accountancy business has an historical advantage other than perhaps from around February 2018 when you had to be an unlisted public company. You don't need that any longer. The law has been rationalised to enable small proprietary companies to be able to go through the process and raise capital from the public. Now is your opportunity as an accountancy business to service your clients, to help those who wish to take advantage of this new opportunity, but also to create a new income stream for your accountancy business to offer interesting and exciting work for your clients. Don't miss this great service diversification opportunity. The accountancy profession for years has sustained itself by the federal parliament making changes in taxation laws, which have required accountants to give advice to clients. But in this case, it is not taxation laws that have been changed. It's this whole new opportunity to offer real commercial services to your clients by assisting them through this process, which is very similar to preparing a prospectus that a public company has to go through. So who's this legislation targeted at? It's targeted at small, medium enterprises and inventors. Inventors who are too big, too old to take advantage of early stage innovation company. Who are the traditional accountants for small, medium enterprises in Australia? They are small to medium-sized accountancy firms. Accountancy firms situated in every suburb, every town, every city across Australia. So if the clients are your natural clients, don't encourage them to go elsewhere to get advice when they're potentially looking at one of the most exciting things they will ever do in their business careers. Offer them a great service. I would urge you to motivate your team to be able to offer a wider range of commercial services so that you retain these clients while they start on this very interesting journey, the journey of capital raising. From your point of view, you can create a new income stream. Is the company that you're looking at a potential crowdsource funding company? Phase 1 is the legal tests that have to be met. And phase 2 is some subjective tests that we have prepared that we think will assist you to identify clients in your firm already and prospects who could be eligible crowdsource funding companies. So the legal test, first of all. Group turnover or sales under $25 million per annum and the value of group assets less than $25 million. The company cannot be listed on a stock exchange anywhere in the world, neither can any associate subsidiary company be listed on a stock exchange anywhere in the world, and the company and its associates cannot be included on a financial market outside of Australia. So that's pretty clear. They're the legal tests. Now let's have a look at some subjective tests, because I think in a small, medium-sized accountancy firm, a large number of your clients probably fit that legal requirement. But I'm not going to suggest that every one of your clients is potentially interested in crowdsource funding. Let's go into it a bit further. First of all, there is no industry restrictions. They don't have to have developed a new widget or a new smartphone or a new scientific formula or developed some sort of new plant. They can be from any type of industry. And there's no age specified. So they can be a brand new startup or someone that's 95 years of age as a company. And unlike the early stage innovation company, ESSIC, which had a prime objective of trying to locate companies that are under 3 years of age, and in some cases they could be up to 6 years of age, that doesn't apply for crowdsource funding. It's virtually every company in Australia Or you could spread it to, say, every business as long as they agree to convert to a company that meets those key legal tests. But let's have a look at some more subjective tests, because I know you will want to try to narrow this down to get a group of 20 or 30 of your clients. Who in your clients is an early stage, high growth, disruptive company? CEO's normally got a fairly strong personality, has a real desire to create something. I was talking to a colleague of mine about 3 months ago, and I said, "What's your objective?" He said, "I want to be in the ASX top 200 within the next 2 years." I said, "Wow, what an objective." Have you got any clients like that? Because if you have, I'd be putting them down as number one as to who you should really be having a serious conversation with. Perhaps they can start their journey by raising some capital, utilising crowdsourced funding. Or are they keen to expand their business or acquire another business? Or do they just have a vision for the business that they can package a good story together to be able to raise capital to then implement that vision? Where are they going to get that money from? It's going to be very difficult to raise bank loans in Australia for the next few years. The banks have copped a bit of a pounding in the Royal Commission. Let's look at another opportunity that I think many of you have potentially got: succession planning. How many clients have you got who are approaching retirement age, who for years have just ploughed every spare dollar that they made in their business back into the business? It became their superannuation fund. But they've suddenly reached 2018 and are looking around the market to see what their opportunity is to sell their business. And they might be feeling a bit dismal because there are thousands of businesses on the market for sale and there are not that many buyers. But over the last few years, a family member, might be a son or a daughter-in-law or a son-in-law or even grandchildren, have come into the business. So the founder's starting to say to him or herself, "Wouldn't it be great if I could exit the business with enough money to retire on with some dignity and the family could continue to run this business?" Crowdsourced funding can help that be achieved. Crowdsourced funding is a group of new shareholders coming in who may end up owning 20 to 30% of the business, but it might allow the succession to occur for the founder to be able to retire and to allow the next generation to come into the business. Now, they can always offer to buy back these crowdsourced funding shareholders in 5, 10 years' time if they've accumulated enough money in the business, but in the meanwhile, it's allowed the succession to occur. How many clients fit into that category? How many of your clients have got loans, not first mortgages on property the company owns from banks, but borrowings that have been secured on someone else's assets, maybe the mother-in-law's? Now, that can be all right to start with, but after a while, their mother-in-law might be saying to them, "Look, I want to go and retire and I want to go to the Gold Coast or the Sunshine Coast, and I need that money." Where's the company going to get it from? Well, one way of getting it might be to raise some capital as a crowdsourced funding company and allocate shares to this new group of investors. And maybe some of your clients have got high credit card debts and the same scenario applies. Would the directors be interested in raising capital to pay these loans? I think you owe it to your clients to put the question to them, to explain the situation so they clearly understand it. And I'd be looking at this as a wealth creation opportunity for your clients. Owning 100% of businesses is not necessary anymore because, according to the government's research and what has happened in the other countries that have embraced crowdsourced funding equity raising, New Zealand, UK, Europe, USA and Canada, there has been in those countries literal floodgates open of businesses wanting to raise capital. And what about this category? Too big, too old for ESSIC. Someone that's developed a new product, process or service. They're aged over 3 years, a company aged over 3 years. They're still a young company, but the legislation for early stage innovation companies has a significant bias towards companies over 3 years. There's plenty of companies around Australia who are inventing new products, processes or services that have been in business for longer than 3 years. And because they're already doing some other things, they've probably got expenditure of over $1 million a year. And hopefully if they're surviving, their income's over $200,000 per year. But they may have developed a new product, process or service and now need to raise some money from somewhere. Ever tried to negotiate with a bank to raise money for that process? They've got no idea what's involved in going from a prototype to being in the commercial market. So let's look at the capital raising opportunities. You can raise up to $5 million every 12 months. The important thing is you can raise that in a number of tranches in a 12-month period. So the checklist to identify your clients is very important. We've included the document to that effect within our crowdsourced funding product package. And there's something in this for you also, of course, because this gives your accountancy firm the opportunity to create new income streams. I can't think of a better new income stream for accountants at present. There's no licensing requirements necessary to assist your clients in crowdsourced funding. The only requirement, I hope, is that you agree that you will subscribe to the ESS BIZTOOLS crowdsourced funding product package. So the first thing your clients are going to need assistance with is an understanding of what this process is all about, and then being able to assist them to produce a crowdsourced funding offer document. And let's look at some of the other documentation that might go with this. The company's going to need a business plan, budgets, cash flow forecasts, a share price determination, business valuation, an information memorandum. Now, what would you charge to do this work for your client? I've estimated that I think there's $20,000 to $40,000 worth of fees on what we have on that slide. You might also then have the opportunity of talking to your clients about providing a virtual chief financial officer service. Because if these companies are going to go to the market and raise capital, I think they've got a real responsibility then to ensure that accurate, prompt financial information is prepared at least monthly, that's available to a board of directors meeting, which will be meeting 12, 10, 8 times a year. And hopefully these companies are going to end up with some experienced directors on their boards who are going to be demanding accurate information, accurate key performance indicators, accurate budget updates. So there will be a tremendous opportunity for accountancy businesses to be able to sit down and have a discussion with your clients who have now gone through a crowdsourced funding process to engage your services to supply a virtual CFO service to them. The main role to start with is going to be advising your client on the crowdsourced funding intermediary role, understanding who the intermediary is and what their function is. There are 7 of them in Australia, appointed by ASIC, and it's a free market situation. Your client has the opportunity of selecting the intermediary they'd like to work with, and your client's able to negotiate a fee with them. And we have in our product package a checklist for determining who's the best intermediary for your client. We now have the opportunity of raising capital as small proprietary companies. So the law's been changed a bit. And I don't know whether you've had the opportunity to catch up with the changes that were made on the 12th of September through this legislation. But proprietary companies still have their 50 proprietary company shareholder limit. The employee shareholders do not count in that 50 shareholder limit. But the crowdsourced funding shareholders have been placed off in a separate compartment of shareholders, so that we end up with something like this. We've got ordinary shareholders, we can go up to 50, but then employee shareholders, there's an unlimited number, obviously depending on how many employees the business has got, and the crowdsourced funding shareholders do not come into the 50. Now, that's not how the legislation was when the then Treasurer first introduced it. We've got 3 groups of shareholders now within a proprietary company that is also a crowdsourced funding company. But a proprietary company can still raise capital under Section 708 of the Corporations Act. So there can be an eligible crowdsourced funding company and also raise capital under Section 708. The legislation indicates that a crowdsourced funding offer must be made by the platform. The platform is the website of the appointed crowdsourced funding intermediary. That's the only place that the document can be placed where people can subscribe. And that's because the legislation requires that shareholder to be, whether it's for $100 or $10,000, to sign off that they have been made aware of the investment warning. Now, these intermediaries all hold Australian financial services licenses, and they're able to provide the crowdsourced funding service. So the crowdsourced funding offer document, just to recap, is in effect a de facto prospectus. And to prepare that document, you're going to have to ensure that the client already has those other documents that I referred to earlier, business plan, budgets, etc. Now, they might already be prepared, but in most cases they won't be prepared to the required standard that the intermediary will require. And the period that this offer can sit on the intermediary's website is a maximum of 3 months, and then it's got to be withdrawn. So the company's either raised the minimum subscription by then, or the intermediary has to give it back. So let's look at some of the main features. A retail investor can invest up to $10,000, and in typical government jargon, a retail investor is anyone who's not a sophisticated investor. And a sophisticated investor, of course, is defined in the Corporations Act. A retail investor can invest a maximum of $10,000 in a 12-month period with a company. So if someone wants to go out and invest $100,000 in 10 companies, they can do so, but they can only invest $10,000 in an individual company within the 12-month period. And they have a cooling off period. No questions asked. Full refund will be given if within 5 business days they change their mind. I was very surprised that the government's introduced this particular rule. I personally believe that every company that raises capital as crowdsourced funding companies should have to appoint an auditor, but obviously I'm not the government. And the government's decided in their wisdom that the figure will be $3 million, so if the company has raised from a succession of crowdsourced funding offerings or Section 708 offerings, when they're combined, if the capital raised exceeds $3 million, the company must appoint an auditor. So let's look at the opportunities for accountants. A high-value service for your clients, a commercial service, a new revenue line for you that will be high margin. This will add value to the services you're providing clients and will increase their loyalty because they will be able to say, well, we grew and we wanted to get a bit bigger and we wanted to raise some capital, and our accounting firm were able to do this with us. They grew with us. They supplied that service. So let's look at what you might be able to earn from offering these services. The advice on the crowdsourced funding operations, the eligibility and defining the intermediary's duties, I think is a fee of $5,000 to $10,000. Now, our recommendation is you do run a free seminar webinar to start with, after you have gone through and done some identification on who you believe the potential clients who might be interested in crowdsourced funding are. Once they have sat down and commissioned you to start explaining the whole process in detail, you could start sending them bills. And obviously it needs to be part of the engagement so that they know what potentially they're going to be up for. But let's look at some of the other items that we've talked about today. Preparation of a business plan for this type of company, $10,000 to $30,000. Probably depends whether they've already got a business plan that only needs some tidying up. Preparation of budgets and cash flow forecasts for the next few years, $3,000 to $10,000. I suspect a number of these company directors are going to need some mentoring on what corporate governance is all about. They will not want to be embarrassed by being on a board that has now got 1 or 2 other people on the board who have got some exposure in other companies. So why not present to them a corporate governance mentoring session, which we have within our system also, $2,000 to $10,000. Preparation of the offer document, $5,000 to $20,000. This is the key document that the intermediary has to sign off on. And then the virtual CFO services that you might want to provide, $10,000 to $125,000, depending on the engagement. And what I haven't mentioned in there, I've just noticed actually, is the share valuation and determining the price of the shares. Could be another $5,000 to $10,000. I think there's a significant amount of work there to encourage you to look seriously at this. I don't believe, though, as I said at the beginning, there's going to be enough work out of this new income opportunity for 10,000 accounting firms in Australia. I think there's going to be enough work for 1,000 accounting firms if you're serious, and especially if you combine it with early stage innovation company and perhaps now some Section 708 awareness, because the small medium enterprise market is going to be far more aware of the opportunities of being able to raise capital. Now, Enable Funding's had an interesting history. They've had Australia's first crowdfunding platform from way back in 2007. They were then known as ASOB, Australian Small Scale Offering Board, who were based on the Gold Coast. They're now been taken over by a company based in Adelaide, the directors of which are people experienced in a whole range of capital raising. ASOB has helped 176 companies raise $148 million over that period of time. On their website, Enable Funding have 30,330 exclusive members. I believe that's jargon for potential lenders. So they've already got a significant investment base. And I'm told so do the other 6 intermediaries. This is just one intermediary because Enable Funding have published this information. Now let's look at their forecast. This is the most experienced crowd forecasting company in Australia. In 2016, $119 million would have been raised primarily out of early stage innovation companies and Section 708 company raisings. So their forecasts were in 2017 the market would go to $210 million. 2018, which is probably 19, 420 million capital raising. In 19 to 688 million. In 2020, they said probably 2021, a shade over $1 billion. And in 2021, probably 2022, $1.5 billion. My estimate is the average raising will probably be around $300,000 to $400,000. This will represent somewhere around 3,500 to 5,000 companies a year who are raising capital. Is it worth your while in getting involved? I think it should be. So what I plan to create a new income stream out of this new market for your clients. This is a great opportunity for some of your clients to go to the next level. Creates new revenue opportunities for your firm, for proactive accountants. So let's look at the crowdsource funding product package that ESS BIZTOOLS has produced. We've got articles and forms to guide you on the process. We've got promotional and marketing material that includes material for your website, a suggested webinar that you might duplicate with your own person doing the presentation, of course, to go on your website. There's a suggested news release that you could send to your local media, communicating with the marketplace that you are a proactive firm of accountants. There's templates to prepare the quotation and proposals to go to your clients. There's the eligibility matrix, which I referred to earlier, which will help you to identify some of those clients who might be really interested in this whole process, but you might have to have a conversation with them. That's why we're suggesting you invite them to a seminar. Incidentally, we have the full planning for the seminar as part of the package. Basically, all you need to do is read it beforehand and then present it. The PowerPoint slides are there, the handouts are prepared. All you've got to do is put your brand on top of them. We've got a whole process going through how you prepare a crowdsource funding offer document. We've got material there so that the directors of the companies you're dealing with can have a clear understanding of the duties, roles and powers of the crowdsource funding intermediaries. And then there's a whole new process starts as soon as the capital's been raised, because all the intermediary does is sends your client an email saying, we have closed the offer, the minimum subscription has been reached. You raised $500,000. Our fee was 8%, so $40,000. We've deducted that and we have transferred today $460,000 into your bank account. So then the fun begins, doesn't it? The company has to produce the share certificates, they've got to get signed, the communication process needs to be agreed upon, perhaps the new board of directors needs to have its first meeting, and hopefully the company can then trade successfully. So the product package that we have prepared, which can be subscribed to as a standalone individual product package with everything that we've referred to today and a whole lot more, your subscription, your investment is $999 including GST, or it is part of our silver package or our gold package. So it's part of both of those packages. So you can subscribe to the silver package for $2,189 or the gold package for $2,970, including GST, which obviously includes the crowdsource funding product package. Let me emphasize, you don't need a special license to undertake this work. The intermediaries have got the licenses and there's only a very small number of them. This opportunity is for accountants where you do not need a special license, unlike financial planning. This is your opportunity to seize a significant uniqueness for your firm, which will help your clients, which will help your team, because they'll feel as if they're doing real accounting work. And it will help your firm because you will have created a new income stream and have positioned yourself in the marketplace as a real commercial advisory firm. If you want to have a further discussion, don't hesitate to give me a telephone call. There's the numbers. Or send me an email, peter@essbiztools.com.au. If you want to look at our websites, please go to www.essbiztools.com.au. I hope I've answered your questions about crowdsource funding, and I really do hope that you will join us on this exciting journey of helping thousands of companies around Australia start the journey towards raising capital. Have a great day.